Okay, welcome, ladies and gentlemen, to our fund manager interview series. Been a while since we've done one of these, but I said I'd reach back out to some of the installs that we have in the Coffee Microcaps universe and brought back a fan favorite, one of Newcastle's best, uh, Luke Winchester from Merewether Capital. Luke, how are you doing, mate?
Yeah, good mate, good mate. I'm glad you clarified Newcastle. That lowers the bar a long way to clearing. So, no, good to be back.
Well, you said it, not me. But anyway, we'll venture on. But for anybody who maybe hasn't met you at some of the Coffee Microcaps in-person conferences, or seen you on other platforms, I know you're kind of a regular on Biz these days, and
Mm.
doing a bit for Stockhead and a few other kind of I guess news media places. And maybe just an overview of Merewether and yourself.
Yeah, yeah. So I've been running Merewether now for just under 3 years. Obviously, been a tough microcap market, but sticking in. And we were just chatting before that we're starting to see that market really turn and starting to see some businesses. You're starting to get rewarded, I think, for some good performance. And we came through some heady days there of 2021. I think some businesses got a bit over their skis, and now as we're starting to see that fundamentals turn around, the market's turning around, and microcap market and funds hopefully with them. So yeah, been running for about 3 years now. Running out of Merewether, we're still very small, about 4 mil funds under management, but that means we can just be that ultra flexible fund manager and play well and truly in that micro cap space. We're not limited by liquidity. We're not limited by size, and you'll see that with a few of the ideas today. Both of them sub 100 mil, but I think two good little businesses, and both of them really good examples of sort of the investments that I think you can find in the micro cap space. Really interesting.
Yeah, no, 100%. And let's get straight into it. The first one actually presented at our last set of
Mm.
conferences in both Melbourne and Sydney. We were delighted to get Aerometrex over across Steve Masters over across from Adelaide. So yeah, a business, based out of Adelaide, so maybe not kind of on the conference retail investor circuit so much in kind of Melbourne and Sydney, given they're based over there. But for anybody who hasn't come across Aerometrics before, either through Coffee Microcaps or anywhere else, maybe just give them a quick 101 of what they do.
Yeah, yeah. Before I do that, I think it's a really good point you just raised, and sort of what I said before. Like, this is an example, as I said, of some businesses did it a bit tough over the last couple of years, but businesses are now really starting to turn around. And I was at obviously the Sydney conference and met Steve, and it's good to see they're an example, I think, of businesses now wanting to get out in front of investors and say, look, we are turning around. You're seeing these businesses really start to hit their straps. So, Aerometrics, it's an for most people, it's a mini near map. I think that can sometimes scare some people away because near map, they are a 1,000 pound gorilla in that market, especially in Australia. They're the dominant player in the subscription aerial imaging, but it probably sells Aerometrics a bit short just to sort of stop there and say, well, near map's big, they're dominant. What chance does anybody have? They've been around since the 80s, longer than Nearmap, very well regarded with what they do, and they've pivoted to that subscription model that Nearmap really pioneered, and to be honest, got into that market quickly and dominated. But where they really Aerometrics is where they really sort of within the industry are well known is for that broader diversified services. So they do some LiDAR, they do some 3D. They're really a one-stop shop for customers and their aerial imaging needs. So as I said, been around for many decades now, very well regarded, made some strategic pivots to that subscription model, tidied up some sort of corporate stuff as well since what you'd call a pretty poor IPO, I guess, back in 2019. The business, probably the timing on that wasn't fantastic. But to that point before, I think that business is now starting to come good, and Steve and the team are keen to get out there and tell the story. So yeah, I think that's the quick intro to what they do.
And, hearing them at the conference and kind of keeping track of their results over the last, let's say, 12 months or so, what, was some of the kind of key points that kind of got you across the line, for Airmetrics to make it into the Merewether portfolio?
Yeah, look, I think for me, and people who have followed me for a while, listen to me talk, on coffee and other places. I really like to find businesses that I think are misunderstood by the market. And the main way you see that is where the numbers that are being reported today really don't do a good job of representing the underlying business and where it's going. And I think Aerometrex fits that. So as I said before, business came to market in 2019, and when they did that, it was primarily a project business. So customers would come to them and say, "We need you to, capture this project, this site, this city, whatever it might be, on a project basis, deliver that to them, and then the customer, would use that data for their own purposes and whatever they needed to do." That's a fine business model, one that Aerometrex, used for, as I said, many decades. It was a profitable business pre-IPO. But of course, it's a cyclical business. It's a lumpy business. And Nearmap, like I said before, did a really good job of coming into that market as a startup style business. Only I think was established in 2009 or something like that, and pivoted to that subscription model where they said, we will fly around the country, capture data, host it on our platform, and if you want to access that, it's a subscription to do it, and creating that real platform. And of course, as we know, since Nearmap obviously coming in that 2009, the subsequent 15 years, we know the dominance of software, the dominance of platforms. It's the business model you want to have. And as I said before, I think Aerometrex were probably caught a little bit flat-footed in that respect. They were a dominant player and probably missed the strategic pivot to subscription, but nonetheless, sort of came to it a bit late, but starting to see some good traction. So to probably directly answer your question, it's that uptake you've seen in their subscription offering. They call their product's called Metromap. They've grown that from call it zero, like sub million revenue in 2019, to probably about $10 million they'll exit FY24 in annualized recurring revenue. And that's a very interesting level too, around that 10 mil, because speaking to Steve, I think what's really important for investors to understand, and software investors have obviously realized this for a very long time, but you have sunk costs to this business. You fly planes around the country, you capture their images, you host them on a platform. There's development and all that sort of stuff as well. But realistically, every customer you add after that point is very, very high incremental margins. So speaking to Steve and some rough numbers, I think it's around that 10 million where, Metromap is your relatively fixed cost base. And so I think as you scale above that 10 mil ARR, the business starts to become exceptionally profitable within that segment. Obviously, you've got the rest of the business as well. So that was the main thing for me that I really sort of have been tracking for a while, but seeing that acceleration in ARR, particularly over the last year or so. They've got some real good traction with the way they've sort of gone to market, sort of pivot themselves against Nearmap in some key areas, getting some traction with customers, getting that ARR. And that's sort of the main thing that I thought you're ready to see that catalyst for the business to really explode, particularly into FY25. So that's the main one.
Yeah, and I think just on, that switch from project-based to subscription-based, I mean, I've seen it so many times over the years. It causes a lot of confusion and misunderstanding, when they report numbers, and that transition as it, takes place, it does. For a lot of investors, I think, especially kind of retail investors who haven't maybe got the time to really dive down into the numbers, it can make the results look very messy. And it takes 2 to 4 years, I would say, for that
It's a long time.
whole customer base to churn over from kind of one contract that they might have had in place, or get into they've done a project but they're not coming back for another project for 2 years or 2.5 years, and then they get into the subscription model. So I think that's one misunderstanding I've seen so many times, when businesses flip from a project style or a once-off service fee style to subscription, that it really messes up the numbers for a period of time, and can cause all kinds of confusion and misunderstanding.
Yep. I mean, last time I was on here, I mean, Prophecy International was one of the stocks I brought up, and that's very much what I tried to highlight. And I think you're right. You've seen it quite a bit, but it's still hard to get your head around because, the numbers do look quite messy. As you said, not just on the revenue side where you're pivoting your customers across to it, but of course, you've got to invest in the capabilities of building up a platform and building the scale that needs to be there to actually support the larger base. But of course, and I think I really like Steve as a CEO and the team he's got around him. I think they present well, and their presentations are also, a lot of information provided to investors, and they talk quite clearly about the investments that's been made in this business and very much ahead of that revenue curve that will come in. And so that's why I'm quite confident that as that recurring revenue does scale, and I think about 10 mils that number, I think you'll really start to see those incremental margins hit the bottom line quite hard. So that's what's got me excited into FY25 and beyond.
Yeah. And then if we look ahead, we're going to have results coming out now thick and fast through the back end of August. What are some of the things you're going to be looking for that, people should watch out for when they're reading through the Aerometrex results?
Yeah, well, look, as I said, I think the main strategic aspect of this business now is that subscription Microcap product. Now, they do have a partner program with that. And so you occasionally see an announcement. There was one quite recently, the global engineering company, WSP, their Australian arm has purchased a bulk set of Microcap licenses to sell into a government customer. So you'll sometimes see announcements like that, which are quite nice. And it's obviously a nice, chunky boost to the ARR. That was about $300,000 per year. But by and large, that subscription now, I think you'll just see updates every quarter, every investor presentation, half year, whenever they update to the market. Hopefully that nice steady trajectory of ARR. I sort of did gloss over them, but they do have a couple of other segments. That LiDAR segment, they're actually quite dominant with that. That's about a 30% market share in Australia. Very small niche, but they're dominant in that space, and that's one where you might see announcements around significant contract wins. So some they've announced in the past was multi-million-dollar contracts to do LiDAR scanning of the Great Barrier Reef, some native tidal land up in Northern Territory, some agricultural customers, Department of Defense. So that's a segment where you can see some big chunky contract wins, which are always nice. And then the other one as well, which again, this is sort of the blue sky, and I never like to put this too much into your valuation, but they have a 3D product. Now, from the work I've done, that 3D product itself is really good. It's just the market; it's very new. There's a few companies and a few customers that have really embraced 3D digital twins. You see that come up quite a lot on a small scale, so an individual project, an individual asset. But what Aerometrex does, they're doing city level 3D, and that market, I think they've got a good product. It's an interesting space. They're just sort of trying to find the use cases and the commercial aspect to it. But again, that's some blue sky, and you could see some announcements around that. They've previously sold their San Francisco model to Google. Stuff like that would always be interesting. Another announcement which you may see, they've sort of flagged this in the past, is from a balance sheet point of view, they've got a rock solid balance sheet, 10 mil cash, but also unlike Nearmap, obviously now a private business, but when they were listed, they didn't own any of their planes or cameras. So Aerometrex have been much more conservative from that point of view, and they've sheet. But Steve has flagged that since they're moving away from that project-based revenue, and it's now going to be more steady capture of Microcap subscription, which is, I think, capital cities 4 times a year and regional centers twice a year, because they can map out their capture much clearer without having to satisfy project by project and work on a sort of utilization basis. They're going to outsource a lot of that capture to another company, and it means they can start to unlock that balance sheet. Maybe sell some planes. They've financed one of their cameras, which these cameras are worth $1.5 million, something like that. They're heavy pieces of tech. So sort of announcements around that I think would be interesting as well. And I'm not expecting dividends or buybacks, but would certainly give them some firepower to, reinvest in the business, maybe make an acquisition, something like that. So there's a few announcements you may see, but by and large, I think this will be one that's driven by the numbers. As I sort of said before, I think first half 24, I think it was a very nice result. Second half 24 is usually stronger for them. So fingers crossed that's the case again. But FY25, I think, is where you'll really start to see the business build. I think that cost base is quite fleshed out now. They've built the platform they need. If they can maintain that sort of 15, 20, 25% revenue growth that they've been the last couple of years, that's where you'll see the profits really start to come through. So they're the main catalysts that I see, and fingers crossed, yeah, we could get a couple of them in the next, coming weeks and months.
Yeah, definitely one to put on the watch list for reporting season. And then another one is presented. I don't think they've ever presented at one of our in-person conferences, but been on our online one fairly regularly, at least once a year or maybe every 6 months when there is report is AI Media, which is a very kind of interesting business working in a quite a niche space, but maybe you're probably better placed to give a quick overview of them than me.
Yeah, so these guys do captioning services. Now, that's a very broad industry, but where they really focus is in live broadcast captioning. And the business has really changed over the last few years, and I think obviously changed for the better. And it's why I think it's a really interesting investment right now. But if we go back to when they first floated, and like Aerometrex, I think they floated in 2019 as well. They were very much a human services business. So what this business used to be, primarily serving Australian and I think UK customers, Channel 7, Channel 9, they would need to provide live captioning for their news and sports programs, things like that. And to do that, a human stenographer, like a trained stenographer, costing $80 to $100 an hour, would quickly type in the captions as the broadcast was happening. Now that had to be done, and still does, under regulation, under accessibility, hard of hearing, deaf regulations. And so, yes, it was like Aerometrex and their project stuff. It was a fine business. It was a profitable business. They'd primarily grown by acquisition. They were quite dominant in Australia, expanding overseas, and sort of doing okay. But AI and automation has hit that industry like a ton of bricks. And so what you've seen over the last couple of years is that the emergence of speech to text engines of just, the quality of them has skyrocketed, particularly in the last sort of 2 or 3 years, to the point now where automated captioning is, from a quality point of view, is overtaking humans and making it very difficult to justify the extra cost of a human captioner. As I said before, somewhere between $80 to $100 an hour, whereas an automated caption can be as little as just a few dollars. So, that sort of, when I present the business like that, and I've sort of compared in the past to someone like Appen, where you had a human services based business completely disrupted by automation and AI. Why would you want to look at AI media? It's a simple thing. What I find exceptionally interesting about this business, and where I think they can leverage that change in the industry rather than be threatened by it, is they made a very good acquisition of a business back in 2021, of a US business called EEG Enterprises. And now what EEG Enterprises did, and still does within AI media, is not the actual captioning itself, but rather the captioning infrastructure. And I think what gets a little bit lost when you take a high level view of the business, is that to put captions on a screen is not as simple as just pointing an AI tool at a screen or a video feed. You need to take that video feed, encrypt that feed, and code that feed, split it into video and audio, send the audio feed to a captioning provider, which AI media can do themselves, or it can be outsourced. Have it captioned, bring it back, sync it up with the video, send it back to the broadcaster, and have it go out for live broadcast. And of course, live broadcast, that needs to be done within a handful of seconds. So, EEG now forming what AI Media calls their technology segment is what's really interesting about this business. And as I said before, on Aerometrex, I love investment scenarios where I think that the numbers and the perception of the business really misses what's happening underneath it. And for these guys in particular, I think focusing on where that business has been historically really misses what they've sort of got underneath there and the growth of that technology. So I think that's the intro to the business, a little bit in depth with some history there as well, but I think really sets the key to where they are today, but more importantly, where they can go into the future.
So it'd be fair to say, their kind of broad investment thesis is, rather than being disrupted by AI, the business is actually embracing the functionality and the tools that have kind of really come to the fore in the last, let's say, 2 years, and they're actually incorporating it into their business for the benefit of the business, and actually probably making it a better business than it was previously.
Yeah, well, look, this is where it gets interesting. So, to be fair, the business is being disrupted by AI. And so, again, you often hear people talk in investment thesis around like a good segment, bad segment, or like an emerging segment overtaking a business. That's what you have here. So that core services-based business is declining by about 10% a year, and I suspect will be a terminal decline. It will happen slower. There is a lot of inertia in this business. A lot of their customers are legacy broadcasters, some of the national broadcasters. They'll be slow to move, and they'll want to stick with human captioners because it's the way they do it. They've got their systems, they've got their processes. But by and large, I think you'll see most of the industry transition to automated captions within the next couple of years. And so that segment is declining about 10% a year, but it's that technology business is overwhelming it. It's growing at about 30 to 40% at significantly higher margins too, about 80% gross margins compared to services on about 40. So get to profitability in a second, but the business is also inflected into some very strong profitability, which is nice as well. But I think the key to it, and again, what sort of gets a little bit missed unless you dig deep into the business, is it's not just a case of you've got a classic services-based business where transitioning into technology and we're getting some higher margins. It's the pie itself is significantly growing. So, like I said before, if you wanted to caption a live broadcast, it was going to cost you about $80 to $100 an hour. Very expensive to do. So unless you were regulated to do it, like a lot of TV channels in most jurisdictions, you just weren't going to do it. It was cost prohibitive. Now that cost has come right down, and as Tony Abrahams, presented on Coffee, and again, I like him as a CEO. As he said a few times, they don't have to explain to their customers the benefit of captioning. Everybody gets it. It's something that it provides all benefit. There's no downside to it. I mean, even if you're not hard of hearing, I watch most of my Netflix programs with captions on, and the statistics show a lot of people do. So they're not having to sell their customers on why they should use captions. Everyone knows they should. It was just always the cost was prohibitive. But now that conversation's changing, where instead of going to these customers and saying, for $80 to $100 an hour, we can provide live captioning, a few dollars an hour, $5 to $8 an hour, and you're getting a live AI caption being supported by the industry standard, network encoded, encrypted, cloud hosted network as well. So, you're now seeing not just those regulated TV broadcasts, but they're starting to win government, enterprise, churches, live events, conferences, stadiums, things like that are now opening up into live captioning, because previously it was cost prohibitive for them to do it. Now it's just it's a simple, low cost, easy to have benefit for what they're doing. So it's that expanding pie I think is really interesting, and because of that network they have, I think leaves them in a very good position to go out and capture it as hard as they can.
As you say, I mean, they're also piggybacking on the growth of streaming, because you can have so many of these, niche events or niche sports where it's, a couple of thousand people, but you can still do live captioning on it. Even if it's not on, Channel 9 or Sky Sports or Stan or whatever, and to be able to now do the captioning along with the broadcast, where before you wouldn't even consider it from a cost point of view. Now it's like, well, we can, it's all kind of part of the package, and it's not a major hurdle. So yeah, that's an interesting one. And just on Tony as well, I'm pretty sure he's one of the founders of AI Media, or is the founder of AI Media as well. So, I
Yeah,
know a lot of
Tony's
people
founder.
are very, they follow that kind of founder-led businesses, or do like founder-led businesses. And, AI Media kind of fits that investment thesis as well, if that's something, investors tend to look for.
Definitely.
And you find more of those down the microcap end than you do up at the top end.
Definitely. Yep. And I think he owns about 15% of the business still as well. So that skin in the game founder, as you point out, ticks a lot of those high level investment boxes for sure.
Yeah, no, for sure. Luke, thank you very much for coming back on and joining us, and we'll keep an eye on those two in reporting season. And yeah, hopefully we can get Tony and Steve either in person
Yeah,
at
fingers
our
crossed.
event 22nd of October in Sydney, or at the bare minimum, we'll get them on in September on the online morning meetings. But yeah, looking forward to seeing how they play out in August.
Yeah. I mean, as I said before, I think both businesses are doing really well. They've got good stories to tell, and you know, as you sort of pointed out, both Steve and Tony have been keen to tell them, particularly on the coffee platform. So it's good to see, and yeah, fingers crossed we can get them back on and give everyone an update shortly.
Yeah. Okay. Cheers. We'll leave it there. Thanks, Luke.
All right, thanks, mate.